So this is vertical analysis of the balance sheet. So you remember on the income statement, we would set net sales to 100%. In using the vertical analysis on the balance sheet, we're setting two different things to 100%, but if you think about it, it makes sense. If you go back to our basic accounting equation, assets equals liabilities plus stockholders' equity, we're going to set our total assets to 100%, and then we're going to set those two together to 100%. So total assets are going to be 100% for both years, and our total liabilities and stockholders' equity are going to be 100%. And everything is going to be stated in terms of those numbers. So basically, you're going to divide everything by 521. 125 divided by 521. And so you can see that that's going to be 24% and 76%. So you're going 125 divided by 521, 396 divided by 521. When you come down to the liabilities and stockholders' equity, and this is where students seem to have some trouble, you're dividing every single number here by 521. You're not dividing anything by any of the other, numbers. It would not make sense, okay? So you're dividing everything by 521. So what do we get? We get like 17%, 26%, 43%. 161 divided by 521 would give us 31%, 26%, 57%. Okay, and then for 2019, it'd be dividing everything by 430. Okay, so this would be the assets, total assets of 430, total liabilities and stockholders' equity of 430. And so we would simply 100 divided by 430. So we get like 23%, 77%, and we would do each of these numbers divided by 430, and so we would get 16%, 22%, 38%, and then the last three we get 27%, 35%, and 62%. All right, so now you've got everything up there. Just looking at the raw numbers, you can see that this company from last year to this year, their total assets increased. That's good to know. Their total liabilities went up, their stockholders' equity went up, everything went up. So you could say, oh yeah, that's pretty good. But using the percentages, you can make comparisons of, in percentage terms, what really happened here. So our current assets went up a little bit. Our planned assets, they decreased a little bit, nothing major going on there. Our current liabilities went up a little bit, but they stayed, a fairly, not too big a change there. Our long-term liabilities went up from 22 to 26%. So we've taken on some additional long-term debt. So our long-term debt went up a little bit. We might want to think more about that. Let's see. The amount of stock we issued more stock. Okay, so our common stock, that also went up, so we issued more stock. But this here, the retained earnings actually fell. Okay, so that went from 35% of our total assets to 26%. So this is something that you definitely would want to find out a little bit more about. Because if you remember the retained earnings, that could be we're not making enough, we made less net income, or maybe we just paid out an enormous amount of dividends. But when you see this going from 35% of your total assets to 26% of your total assets, taking on a little more stock, taking on a little bit more long-term liabilities, a few more short-term liabilities, definitely raises questions. So you can see where your vertical analysis and your horizontal analysis, just converting everything to percentages makes it a lot more easy to analyze what's going on, whether you're the business owner or whether you're looking at the company to work for or invest your hard-earned money in. All right, so that's your vertical analysis of the balance sheet, and the next thing we get to will be the ratios.